you. Good day, everyone. I'm really glad to be here on the stage today, and I hope my ideas will be useful for you. And even though you're probably waiting for the break, but I hope that this discussion about the macroeconomics will be interesting and will give you more general information, because this helps to make better decisions. Today we'll take a look at global trends, which are quite atypical right now. We live in a very unusual times. On one hand, world economy is affected by cyclical fluctuations. On the other hand, we see significant geopolitical changes, which naturally has a strong effect on economic trends. Naturally, all of this macroeconomic context affects our small and highly open economy. All Baltic countries are small, our internal markets are small, and we have limited internal growth. So our ability to compete internationally via import-export is highly important for our mid to long-term forecasts. Right now, there are several threats to our competitiveness. It's energy issues, there's also geopolitical damage, and other challenges we are facing. But let's start with the cyclical changes. While evaluating the cyclical changes and all other macroeconomical changes, it's important to look at expectations. The way companies and people evaluate and look into the future affects the way they act. Thus, economists actively observe the expectations of people and companies, and on the left you can see Market Industry Purchasing Managers Index, which is very important because purchasing managers are those who dictate the pulse for company development, company ambitions, and you can see that on both sides of the ocean, Purchasing Managers Index is below 50 points, and this indicates that they don't see a large opportunities for growth. They are careful about the future, and it's the same when you look at the Federal Reserve Bank of New York recession probability index, which is above everything we've seen in a long time right now. This makes us worry about the further developments in the USA, because whatever happens there has a huge impact on the rest of the world. Another thing, as I mentioned, there is geopolitical context, which became very important during last decade, and it's even more highlighted by Russian invasion to Ukraine. And even though Western countries are trying to limit their purchasing of oil and other resources in Russia and China, it's still important, and companies and people have to reconsider their supply chains. And as the European Commission already indicated previously, we need to shorten the supply chains because pandemic exposed the risk of dependency on the other regions of the world. Thus, Europe really needs to reconsider their business principles, and since we don't have our raw materials, we are quite dependent on other regions as well. And this was what resulted in energy crisis last year. That was what Putin planned. He limited the gas supply to Europe before the war, and it naturally created huge pricing spikes for companies, for people living in European countries, but fortunately nature chose the right side, and we had probably the warmest winter in a decade this year, and we managed to arrive to the spring with probably fullest gas storages in a very long time. Naturally, prices react to that, and they are back to pre-war levels. Pandemic also left a serious impression on raw material markets. It created a disbalance in supply chains, and initially there was a huge price bubble which affected companies and reached the end clients. It also gave birth to this inflation, which naturally prompted a reaction by the European Central Bank. And as European Central Bank has mentioned that if inflation is getting away from 2%, the European Central Bank needs to take action, and interest rates now are back to probably the highest level in 15 years. And this is already affecting the companies in the Eurozone, and naturally this lowers liquidity of people, of companies, and we need to pull the handbrake on development because the era of cheap money is over and funding becomes more problematic than in quite a while. Even financial markets don't expect further growth of interest rates, but they will probably be a bit higher for a while if the inflation won't stop. However, the rise of interest rates is probably over, but there is no guarantee that it will fall down quite fast. It's unlikely that the European Central Bank will lower the interest rates very fast. Let's see how Baltic countries look in this complicated situation, and I'd like to start by looking back a bit, which says a lot, because we as a region had serious difficulties getting out of recession in 2009, and this actually was a rude wake-up call after our fast development after entering the EU. We had to learn again how to live within our means and stay competitive. These are the lessons all three Baltic countries had to learn at a high price, painfully. We found ways to do it differently, and we regained our competitiveness, and we were doing quite well even throughout pandemics, which was just a small hitch, temporary glitch, which was quickly forgotten in all three Baltic states. Just it's enough to look at the next year. And now that we're looking at slower economy right now, even though we're making fun that nobody is coming here for tourism, we're not very hurt by the pandemics. Right now, we're probably affected a lot more, and we don't have serious arguments for why we will be better off than other countries. And talking about export, the situation was quite impressive for a while. Export grew 3 times since 2011, and you can see that the pandemic not only didn't stop us, but it even increased our export. And it was probably at least partially due to the fact that Far East closed, and we, being flexible and smart, we managed to fulfill the open needs with our production. However, Far East is reopening again. China is starting to increase the manufacturing and export, and our success there is probably already over, and we may need to reorient again. On the other hand, internal consumption is seriously impeded by the highest inflation in the EU. All 3 Baltic states had a huge inflation lately, and you can see it on the right that the retail really went down because our things we can afford right now are really down in comparison. This means that the economy cannot develop on that, and raising interest rates naturally affect this as well. We have them higher in the Baltic states than in the other European member states. On the other hand, we are at least glad about the fact that our debt burden is quite low in comparison. Only 17% of Lithuanians have mortgage, which means that not many households are affected by rising interest rates. Real estate market had a great year lately in all 3 Baltic states. It's natural because since economy did well with pandemics, during pandemic, and governments were adding money to the market. With low interest rates, it was great market for real estate. You can see it on the right. In Lithuania alone, the real estate prices went up by 1.5 times. And naturally, it is starting to become a challenge for some people, especially young families. So now maybe the slower economy will let us will curb the growing real estate prices and let wages catch up. Labor market is an important part of our competitiveness because expenditure of labor is an important part of expenditure for all businesses. And for a long time, Baltic states had a great labor market, very low unemployment. We had a lot of need for talent, for specialists, for experts. We had a lot of orders during pandemics lately, and there was a huge need of qualified people. This naturally helped increase wages. You can take a look on the right, and you can see how fast the wages went up in the Baltic states compared to the average of the Eurozone. On one hand, it's great because it helps to grow our region, to make our lives better. On the other hand, this means that the competitiveness of our businesses faces a challenge, and not all companies can absorb these growing costs. You can see that our region is approaching a certain glass ceiling in these two graphs. For example, on the left, you can see that 1 hour of labor is relatively cheap in Lithuania. On the other hand, on the right, you see that general expenditure of labor is becoming a serious issue in our countries relative to the GDP. We're already approaching or even overtaking the EU average. This means that even though that at least in Lithuania we have a lot of small wages, and this is not healthy for the economy. What are the possible solutions here? Well, automatization, robotization, lower dependency on processes that can be performed by robots. However, Lithuania is investing very little into that relative to its GDP, just a bit above the European average, while our competitors are way above us. And we should really invest a lot more into automatization. Talking about the structure of economy, which probably dictates this situation with a lot of small wages, we can see that at least in Lithuania we lack high EV businesses, and this means that there is not enough of it, because expenditure of labor is growing by 10% every year, and our competitiveness is going to face more and more challenge here. We always thought that the IT sector is our strong side. However, Estonia is exporting a lot more of IT services than we do. We would really like to see a higher competition here. We would like to see more achievements of Lithuania here. And my last slide is at least bringing us some peace of mind, even though economy is entering a difficult stage and we are already seeing recession. We will have difficult years ahead. Still, Lithuanian market, Lithuanian economy is ready for this. We have low debt burden in public and governmental sector. Our companies had really profitable years. Households also have record deposits in banks. We all have financial reserves, which means that we are, even though the rise of economy is changed by the dip, at least for a while, this time we are much more ready for this than we were in 2009. That's all from me, and if you have questions, I'd be glad to answer them. I think we definitely will have some questions. We'll see them on the screen here. And really, thank you for this last slide. You will not say in this case, like we say here, that there's no such bad thing that doesn't get aired. So economists won't say that about the crisis. Economists have a lot of jokes about the crisis, but I won't go there. But yes, it's natural that there's a certain cycle. We had really great years for both manufacturing, for retail. It's natural that even though it all went to the bad side, the geopolitical situation, the cycle, it all means that we will not be able to even approach the previous year. And this crisis is more of a mathematical result of all than the real crisis. And now there are questions from someone who's watching us from other countries.
What do you think about an unstoppable USA Federal Reserve money printing policy and how it will affect the future of the Baltic region?
Well, actually, the money printing in the US and in the euro area has already been coming to an end, and currently the processes are reversed because central banks on both sides of the Atlantic are tightening. They are increasing interest rates and reducing liquidity. That means that they, instead of printing money, they are just absorbing money and making the monetary area a bit more tight from day to day. So that means that central banks already have changed their strategies due to record high inflation observed on both sides of the Atlantic.
Can we call those who are at the central banks that they like bartenders because they open, the bar, invites everybody, and when it's fun, it's okay, but when it's too fun, they just asking people to leave?
Actually, I think that they've been too late to close the bar this time.
Okay. Good. Let's switch back to Lithuanian.
How many of you, please raise your hands, are planning to buy real estate soon? 5 people are really interested about these questions. What are your predictions for real estate prices for the upcoming years? 5 upcoming years. So the question is, will the prices go up or down, to buy or not to buy? My answer is that if it's your first home, there's no bad time to buy it. If you found a home that's suitable to you, just buy it if you can. Right now, it's interesting that there's less demand and buyers are waiting for changes. They are optimistic, somewhat optimistic about the prices. However, sellers are not sad either. They had great sales during previous years. They had great profits, and right now they can invest their profit into obligations, for example, and just wait. So again, this is probably worrying that supply probably will not increase. This means that there is not much space for the prices to go down. Even though you can see that in Lithuania it would probably be good for real estate prices to at least stay where they are after they grew up so much lately. So it's basically a waiting contest between buyers or sellers. Yes, in this case, of course, if buyers are buying with cash, it doesn't hurt them at all, but for those who need a mortgage, it's expensive. What actions by the government could help our economy? Well, I have one recipe that could be an eternal recipe here. Pandemic really changed our understanding. We all are looking at our government, what can it give to you? And politicians are obviously happy to throw the taxpayer money at everybody. However, what the government can do right now is to implement the best aid for economy, invest money in a way that it would go the longest way. It means that there is no bad assistance, there is no giving away money, but the government needs to invest in structural funds, long-term projects, basically to give businesses a chance to earn money. Then businesses could raise wages, and if the money go through all the chain, through the whole economy, it would really help us the most. We have less and less time and more questions. Let's try to answer them in a short way. Can we call this inflation a crisis already? Well, inflation scares central banks the most because it's difficult to stop, but the inflation we saw last year, it was not entirely economy-based. It was not because of everyone was spending money left and right. It was a shock, an external shock due to war, due to supply chains damaged. There was a mismatch between supply and demand, and this inflation is will probably be already forgotten at the beginning of next year. Prices in Lithuania have already stopped growing, and we can probably even expect the prices going down soon. What's your opinion on the European Commission forecast that Lithuanian economy will grow this year and even more than they said in their previous forecast? It's interesting. I was already talking today about these forecasts, and our forecast is recession because it's very difficult to have a growth in the economy when we really had decline during the first quarter. This probably means that the European Commission probably did their forecasts without having the results from the previous quarter. Right now, I don't really see it, nor my colleagues see how can there be a certain outbreak in Lithuania that would help our economy grow that much. Question about the AI, will it make us rich or poor? It's more of a philosophical question. We would probably need more time for this. Next question. How do you recommend businesses to prepare for worsening economy? I think companies had great years previously and they should be ready. Naturally, there's a lot of worry about unemployment, but these financial reserves the companies accumulated should help them keep their employees, because during 5 years till now it was really difficult to attract and keep good employees. Even though now there are certain difficulties, there's less manufacturing and sales, but the companies should not be hurrying to fire their employees. So, next to the last question, what is the best place to invest money? Economists are not likely to risk, so we don't recommend anything unnatural, so there's 5 main things. You need to have a liquid reserve, you need to invest periodically, you need to invest for long term, you need to avoid trendy purchases that are not historically tested during crisis. And the 5th one is you need to diversify your investments. This means that when one of your investments is going down, the other should compensate. And the last question, would you like some champagne? Unfortunately, I'm driving, but thank you for the offer. And we want to applaud Indrė, and thank you for this great presentation. Thank you for your answers, and here's a token gift for you.